I wish you just had a shortcut. To really get your head around some of these really complex, cutting-edge topics, especially in crypto, it's just information overload, right? Well, today we're doing a deep dive into something absolutely critical, really fundamental for the future of decentralized tech, blockchain interoperability.
That's exactly right. And our mission basically is to cut through all that noise. We want to give you a clear, a really solid understanding of what blockchain interoperability is, why it's such a big challenge right now, and also how people are trying to solve it. Specifically, where a project like Quant fits in with its QNT token, and even its investment potential. And this isn't just us talking, right? We've built this on solid sources, industry analyses, research papers, market predictions, the whole lot.
So maybe the first question for you to think about is, what does it even mean for blockchains to, talk to each other? And more importantly, why should you care? Okay, let's set the scene a bit. Because the way blockchains are right now, it's pretty fragmented, wouldn't you say? Loads of different platforms doing their own thing.
Oh, completely. You've got this whole ecosystem of independent platforms, each with its own strength, sure, but also its own limits. It's digital islands. Busy, active islands, but hardly any bridges connecting them.
Right, digital islands, I like that.
And that fragmentation, that's the core problem interoperability is trying to fix. Put simply, it's about letting these separate blockchain networks talk, exchange data, and crucially, act on that data seamlessly. But it's not just simple messaging. There are layers to it. We can kind of break it down into three types. First, there's syntactic interoperability, that's the basics. Can they even recognize each other's language? The protocols, the data formats.
Okay, like knowing the grammar.
Sort of, yeah. Then you've got semantic interoperability, this is deeper. Can they actually understand the meaning of the data being sent? Can they use it properly? And then the big one, functional interoperability. This is the ability to actually process transactions, run smart contracts across different networks. That's the ultimate goal, moving from just recognizing words to conducting complex business together.
So it's way more than just sending a text message between islands. It's about running joint ventures.
That's
like a huge hurdle for things really taking off.
It absolutely is a major bottleneck. And this lack of smooth connection causes real problems. We see this talked about a lot in the research. For starters, limited scalability. Individual chains just struggle with the sheer volume needed for mass adoption. Imagine if every website was its own separate internet. That's kind of where we are. It also means restricted functionality. Building complex apps, decentralized apps that need features from multiple chains, really hard right now. And maybe the biggest issue, siloed data. Information stuck on one chain, useless to others. It just stifles innovation,
Yeah, it's like having fantastic ingredients for a recipe, but they're all locked in different cupboards, and you don't have all the keys.
That's a great way to put it. But what's interesting is the market gets this. People see the need. The whole blockchain interoperability market is projected to hit about $1 billion by 2028. Growing fast, too, like 27.2% CAGR. That tells you something.
Okay, $1 billion just to connect the dots. Clearly a big problem people want solved. So if fragmentation's the issue, what are the clever ways folks are trying to build those bridges between the islands?
Well, there are a few main approaches popping up. One is cross-chain protocols. These are designed for direct communication, direct asset transfers. Think of them like setting up direct ferry lines or maybe universal translators. They create a layer that helps convert messages. Good examples. IBC, that's inter-blockchain communication, which the Cosmos ecosystem uses, lets their independent chains swap data securely. Polkadot has something similar called XCMP for its own parachains to talk to each other within its network.
Okay, so direct lines. What about bigger picture stuff, like blueprints for building connections in a standard way? The framework...
Right. That's where interoperability frameworks come in. They provide the toolkits, the standardized ways to build apps that are designed to be interoperable from the start. The Cosmos SDK, for example. It's a software development kit, lets you build blockchains that are basically pre-wired to connect to the main Cosmos hub. And Polkadot has Substrate. Same idea, a framework for building their custom parachains that are meant to work together. It's like giving builders Lego blocks that are guaranteed to fit.
Makes sense, providing the tools. But okay, what if you just need to move something valuable, like a token, from island A to island B? You don't want to build a whole new app, you just need to get your Bitcoin over to the Ethereum island to use it there.
Exactly. That's a huge use case. And that's where decentralized bridges are key. They act as go-betweens. They let you transfer assets without needing a central company controlling it all. Usually how it works is they lock your asset, say, Bitcoin, on its original chain. And then they mint an equivalent wrapped token on the destination chain. Wrapped Bitcoin, WBTC on Ethereum is probably the most famous example, lets Bitcoin holders jump into all the Ethereum DeFi stuff, lending, borrowing, trading. RenVM is another project doing similar things. It's all about unlocking liquidity, making assets usable across different ecosystems.
And I guess for all this to work smoothly everywhere, you need everyone to agree on some common rules, like standards for the road.
Absolutely critical. You need interoperability standards, just like the internet needed standards like HTTP for websites. People are working on this common data formats, communication rules, security measures so things can connect reliably no matter the underlying blockchain. Groups like the World Wide Web Consortium's blockchain group, the Enterprise Ethereum Alliance, they're pushing these standards forward.
Okay, so lots of different angles, direct protocols, frameworks, bridges, standards, but all aiming for that same goal, connection. Which actually brings us neatly to one specific project that keeps coming up, right? This is where, for me, it gets really interesting, because one name you hear a lot in this space doing things quite differently is Quant, with their Overledger system.
Yeah, Quant is fascinating because they realized early on the problem wasn't really needing another blockchain. It was needing a way to connect all the existing ones, plus the old traditional systems, without making everyone rebuild everything. So Quant's Overledger, it's not a blockchain itself. It's an interoperability layer that sits above everything else, like a universal translator or maybe a superhighway connecting different cities. And this design gives it some big advantages, especially for businesses. It's API-driven. That means companies can just use familiar software interfaces, APIs, to do complex stuff across chains. Like, imagine synchronizing traditional Swift payment data directly with a smart contract on Ethereum. Overledger enables that. It's also built for compatibility with legacy systems. Think about sharing patient data across different hospital chains, but needing to stick to rules like GDPR. Quant handles that. And really important for businesses, it's fork resistant. If one blockchain splits or forks, Overledger communications remain consistent. That's huge for stability. They just released Overledger 2.2.0 actually. Big performance boosts, apparently getting API response times down to milliseconds. They say it cuts cross-border payment costs by something like 72%.
Okay, so they're not building another island, they're building the bridges between all the islands, and even to the mainland's old cities, so to speak. And who exactly are they building these bridges for?
That focus is really key to understanding Quant. They are laser focused on companies, enterprises, government agencies, partners, not primarily retail crypto traders. They're not chasing TVL, total value locked, like many DeFi projects. Their whole strategy is B2B, business to business, building for real world, large scale, often regulated use cases.
And with that business focus, can you give us some concrete examples? Where are we seeing Quant actually making a difference right now? What's the real world impact?
Oh, the impact's already pretty significant in some major areas. Take financial infrastructure. Their work with Swift. They've helped cut cross-border settlement times from days, literally days, down to under 10 seconds. Think about the efficiency that unlocks globally. It's massive. Or medical data. In Germany, healthcare institutions are using Overledger right now for sharing patient data while staying compliant with GDPR. Secure, but accessible when needed. Then there's supply chain. Walmart in Asia is using Quant Network Flow. It automates product tracking, and they reported it improved their inventory turnover by 23%. That's real bottom line impact. It really makes you think, what happens when data that was trapped can suddenly move securely like this?
Those are some serious efficiency gains. Wow. And what about the whole CBDC thing, central bank digital currencies? Everyone's talking about them. Where does Quant fit in?
They're a big player there too, potentially. Their tech, called real-time tokenization, or RTT, is actually being used right now in the European Central Bank's digital euro pilot project. This RTT allows for instant issuing and moving of assets like bonds directly on-chain. Now, if the digital euro goes live fully, Quant could be a core piece of tech for what might be $1 trillion ecosystem. That's enormous potential.
And it sounds like they're playing the long game on regulation too, which must be reassuring for those big enterprise clients.
Absolutely. Their regulatory awareness is a real strength. They went through the UK's FCA sandbox way back in 2021, and they've actually been involved in shaping the EU's MiCA regulation. That's the big markets and crypto assets law. Being that close to the regulators, understanding compliance, it puts them in a really strong position for large-scale, serious deployments.
And making it easy seems key too. I saw mentions of partnerships with automation tools, Mig, Zapier, OutSystems, Forge. How do those help businesses use this without needing a PhD in blockchain?
That's super important, yeah, because complexity is a killer for adoption. These partnerships essentially let business users visually build workflows, drag and drop. They can connect their normal business systems, CRM, ERP, whatever, directly to blockchain functions via Overledger without needing to write complex code or even really understand the underlying blockchain tech. It's about lowering the barrier to entry for the average company.
Okay, so Quant's tackling these massive enterprise challenges. Makes sense. But what about the token, QNT? How does that fit into the picture? What's the economic model, and why should an investor potentially pay attention?
Right, the QNT tokenomics. It's built on a deflationary model, which is quite distinct. First off, there's a fixed total supply, just over 14.6 million QNT. That's it. No more will ever be created. Then, a chunk of that supply gets taken out of circulation through what they call license locking. Businesses pay their annual license fees for Overledger in regular money, like dollars or euros. Quant then uses that fiat to buy QNT on the open market and locks it up for 12 months. Right now, something like 2 million QNT, maybe 16.5% of the circulating supply is locked this way. Plus, way back after their ICO in 2018, they permanently burned about 9.4 million tokens. So the available supply is actively shrinking. And we see this link between usage and value. More API calls on Overledger means more licenses needed, means more QNT locked up. Q1 2025, for instance, API calls jumped 37% quarter over quarter. And during that time, QNT's price went from around $68 to $84. It suggests that usage drives value logic holds up.
That's definitely different from a lot of other cryptos, isn't it? Fixed shrinking supply versus models where new tokens are always being created.
Exactly. It's a big contrast. Look at Polkadot's DOT that's inflationary, maybe around 10% a year. More DOT keeps getting minted. Cosmos's ATOM is also inflationary. Could be anywhere from 7% to 20% per year added. So for some investors, QNT's appeal is that built-in scarcity and the direct tie between real-world business adoption and demand for the token.
Which brings us to the investment outlook. CoinCodex has the sentiment for QNT as neutral right now, but the fear and greed index is at 60, which is greed. So some optimism there. Short term, they're predicting a rise, maybe almost 15%, getting it to around $123 by mid-September 2025.
Yeah, and looking further out, their models for 2025 suggest a potential ROI over 130%, average price around $199, maybe even hitting $259 by October next year. Long term, towards 2030. They see it trading between, say, $281 for $305. That's a potential ROI of 180%. Their algorithm's highest guess goes way out to 2050, around $759. Of course, these are just predictions algorithms.
Still, with numbers like that, you see discussions online, people wondering maybe QNT instead of more Bitcoin or Ethereum, even if they don't have a full Bitcoin yet. What's the rationale there?
It's an interesting debate you see in the communities, yeah? For some, it boils down to perceived growth potential. QNT has a much smaller market cap than Bitcoin or Ethereum. So the thinking is there's potentially bigger upside, more room to grow, especially if its enterprise strategy really pays off. Bitcoin is seen as, proven and safest, the digital gold. But for investors okay with more risk, seeking potentially higher returns tied specifically to enterprise blockchain adoption rather than just the wider crypto market swings, QNT looks like an interesting play because of its specific model.
It sounds compelling. But let's talk risks. Crypto is volatile, competitive. Even with Quant's focus on regulation, what are the main potential hurdles or downsides?
Absolutely crucial to consider the risks. No guarantees here. Even being regulation friendly, there's policy volatility. You mentioned CBDC as well. What if a major administration, like we saw hints from the Trump camp, actively opposes CBDCs? That could definitely slow down Quant's plans, particularly in big markets like the US. Then there's technical competition. Polkadot, Cosmos, others, they aren't standing still. They're constantly upgrading, improving their own interoperability features, also targeting enterprises. It's a competitive landscape. And finally, liquidity risk. With a relatively small circulating supply, around 12 million QNT large buy or sell orders could potentially move the price more dramatically than for tokens with billions in circulation, thinner market.
And one last thing people sometimes ask about Quant's roadmap, because it's not always super public like some other projects.
Right, and that's mainly because they're a B2B company. Their roadmap is often more internal or shared directly with their enterprise clients and partners based on specific needs and contracts. It's not typically the kind of public consumer-facing roadmap you see from projects focused on retail adoption. Their main product, Overledger, is live and working. Development is driven by business requirements.
Okay, great clarification. So we've dived deep into Quant. Let's zoom back out now. How does Quant's whole vision stack up against those other big players like Polkadot and Cosmos? And what does all this striving for connection mean for technology's future?
It's really useful to compare them because their philosophies are quite different, even if the goal is connection. Let's talk infrastructure. Quant, as we said, is like that universal adapter. Overledger connects everything, blockchains, APIs, legacy systems. It sits above. Polkadot is different. It's a layer 0. Think of it as the foundation, the ground itself, upon which other specialized blockchains, its parachains, are built. They all share security from the main relay chain. Cosmos is more like a framework for building independent, sovereign blockchains called zones. They can govern themselves, but use common tech, like Tendermint BFT. That's just their consensus mechanism, how they agree on things to communicate and trade with each other, like independent states with trade agreements.
So fundamentally different ways of building the connected world. What about the scope of that connection? How wide do they cast their nets?
That's another key difference. Quant's interoperability scope is arguably the broadest. It's aiming to connect across sectors, different blockchains, yes, but also existing APIs, data sources, financial systems, enterprise software, even regulators. It wants to bridge the old and the new. Polkadot is primarily focused on connecting its own parachains via the relay chain. Cosmos focuses on connecting the zones within its network via its IBC protocol. Quant's ambition seems wider, connecting into many existing systems, not just connecting newly built chains within its own ecosystem.
And developers. Attracting people to build on these platforms is crucial. Are their approaches similar there?
They all know developers are key, so yes, they all have programs, tools, grants. Polkadot and Cosmos are fully open source. Quant's core Overledger code is patented, a business decision, but their SDK, the toolkit for developers, is open source. One really interesting thing with Quant, especially for businesses, is the idea of maps, multi-chain applications. These aren't like typical dApps stuck on one chain. Quant uses something called treaty contracts. These are clever agreements that can run off-chain but orchestrate actions and verify things across multiple blockchains simultaneously. It potentially offers much more complex utility than a standard dApp. Think of them as cross-chain command centers. Polkadot and Cosmos generally encourage dApp development on their specific parachains or zones.
Okay, maps sound powerful. Looking ahead now, beyond these current players, what new technologies might supercharge this whole connectivity push? What's coming next?
Good question. There's definitely more innovation coming. Layer 2 scaling solutions, things like roll-ups or state channels, initially designed to make single blockchains faster and cheaper people, are now looking at how they could make cross-chain communication faster and cheaper too, like adding express lanes that also link different highway systems. Zero-knowledge proofs, or ZKPs, are huge. They let you prove something is true about data on another chain without revealing the data itself. Massive for privacy, especially with sensitive enterprise information crossing chains. And trusted execution environments, TEs. These are like secure hardware zones within computer chips. They could offer a standardized, super secure way for blockchains to interact and share data without trusting each other completely.
And those common standards we talked about earlier will keep evolving too, I assume.
Absolutely. Standards are the bedrock for mass adoption. Things like decentralized identifiers, DIDs are emerging. Standard ways for people or things to have a digital identity on a blockchain that works everywhere. Then you build on that with verifiable credentials, tamper-proof digital certificates, or claims like a driver's license or a degree that can be shared and verified across networks reliably. And of course, researchers are constantly working on better, faster, more secure cross-chain communication protocols. The underlying tech keeps improving.
So you tie all that together, the different platforms, the new tech like ZKPs, the evolving standards. What's the big picture payoff? Why should our listener really care about all this complex stuff happening now?
Because the potential impact is enormous across the board. In DeFi, decentralized finance, true interoperability unlocks crazy new possibilities. Imagine easily combining assets and services from 5 different blockchains into one seamless financial product. More liquidity, more innovation. For cross-industry data sharing, it's revolutionary. Supply chains get hyper-transparent traceability. Healthcare systems can securely share patient records when needed. Identity verification becomes simpler and more secure. And when you connect blockchain with the Internet of Things, IoT, think smarter cities, more efficient supply chains tracking goods automatically, enhanced security for connected devices. Basically, connecting these digital islands unlocks a whole new level of complex, automated, trusted interactions. It could genuinely reshape how businesses operate and how we all interact with data and digital value.
Wow. Okay, so what really stands out today is that this whole idea of blockchain interoperability, it isn't just some niche technical puzzle. It really feels like the essential key, the missing piece to unlocking what blockchain technology can truly do across pretty much every industry. And Quant, Well, with Overledger and that clear focus on business and regulation, they're definitely taking a unique and pretty powerful swing at being that universal connector for our increasingly digital world.
So as you think about this future where assets and data just flow seamlessly between networks, maybe ponder this, what incredible new things become possible once all those digital islands are finally properly connected? And maybe more personally, what role could you play in that much more interconnected digital future?
Lots to think about there. Thank you for joining us on this deep dive today.